Hello, I'm Robert and welcome to my channel, where I discuss everything automated algorithmic trading, or simply algo trading. Today I'm going to get into the details of this last couple of weeks within the Euro USD market, and I'm going to use a much larger chart than normal to help evaluate what I think is going to go on over the next week or so. So let's get straight into the chart. Now, if you've followed my channel for a while, you're used to seeing this pattern from my shorts. The yellow lines are the range of the market that I have been analyzing. And as we can see from this chart and from previous videos, the range has shrunk quite a bit considering what it used to be. It was at 1.069 to roughly 1.10. So the range has shrunken quite a bit. The purple lines are the frequency-weighted support and resistance levels within the order book. Now, frequency weighting is where I take into account the number of times the price has appeared over the last 48 days. And I multiply that by the order book volume to give me an idea of where the market is sitting. Statistically, where the market has been previously is a high probability that it will want to return. And of course, finally, the orange lines. This is where the actual volume of the order book is sitting at the moment. Now, the Euro USD market is closed today, so it's a perfect opportunity to really look at the chart and get an idea of what has been going on and what is likely to happen in the upcoming next week or future weeks. As we can see from the last week, we had 4 days of just a hard bullish rally, and then the bears finally woke up and all out mayhem broke out between the bulls and the bears. An epic struggle of who will control the market. The bears took control Friday, but it wasn't without a lot of pushback. And in fact, the order book itself, 45% of the support side of the order book is within 3 different levels. That is pretty significant considering where price has been versus where it is expected to be. I really don't think price is going to go below those 3 levels. And as we can see, taking into account previous videos, we look like we have a squeeze going on, meaning the range has drawn down quite a bit and is very narrow compared to what it used to be. I personally believe this suggests that price is going to go higher over the next week or so, potentially longer. I think we are likely to see the 1.10 range again. Now, the orange lines, support and resistance, are where the buyers and sellers want the prices to go so that they are able to make a profit. So realistically, I think this is another clear example of just how much this squeeze is going to play into the market coming up. I think we are going to see a lot of interesting pushback between the bulls and the bears, particularly on Monday, as the bears try to regain control of the market. Friday was a bit of a footstool or a foothold, but I don't know if it's going to hold, because bearish resistance within the order book isn't that strong. They really don't have a huge amount of weight backing their presence, as we have noticed within previous days where the bulls really struggled to gain control of the order book because of the bears having 3 levels of resistance. Now, with the bulls having 3 levels of resistance, I think the bears are going to be in that same situation. There's more to the story, though, that we need to pay attention to with just how narrow this range is. So let's take and scale back the market some and get a bigger picture of what we can expect this market in terms of a general consensus. Now, of course, there are no guarantees in the market, but we can see clear support and resistance levels within the candlesticks, and we can see how that's going to add pressure back and forth in response to and with respect to overall buying and selling pressure. Remember that you are dealing with two different economies on this chart, the euro and the US dollar, and that is a lot of money moving around quite drastically. So the pushback between these two currencies is going to be quite aggressive and very strong. As we can see from the various support levels that exist within the market, find my mouse here, there has been several times where the market has bounced back and forth quite aggressively between these levels when the range was higher and as it progressed over time. Now that doesn't mean that price may not return to these zones. It doesn't mean that price is going to skyrocket higher. This is just my opinion of what I think is going to happen based upon what I have seen happen in the past. There is no guarantees in the market except that sooner or later you're going to lose money. But realistically, as you look at the market and you really begin to see how it unfolds, for example, let's really back out and we can see where the market is sitting right now and just how small of a range we are really looking at versus the historical data of where the range once was. Even going back in the last year, we can see that price went down quite a bit. And of course, here is the deep bearish run that the Euro USD suffered last year, which was quite aggressive for most people. Quite profitable if you had the right strategy. But if you didn't, it did a lot of damage. Equally, we can see here where there has been a significant bullish uptick, even though the bears tried to change that here. But we can see where the range is and where the range is likely going to want to stay. But I do see it very possible with this squeeze between the buyers and the sellers that range may want to return to this previous higher level at 1.12, 1.13. So as we keep going backwards a little more, we can see really that the market has limited itself quite dramatically within actual price to volume reliance. So even if the price does return to this point, I really don't see it going past this point. And quite frankly, when you look at the market as a whole, this very well may trend downwards again. I think it is going to go up, at least on Monday though. Quite possibly even Tuesday. But overall, I think we can see the larger trend on just where this market is going to happen and what we can expect out of the market. Be prepared though for the bulls to continue to push at least for Monday, possibly Tuesday, before the bears really take root and start pushing downwards. I don't think they're going to go as low as we've seen within the 1.04 range, but considering that price has gone down here twice within the last year, it's certainly not something that can be taken off the table. Now let's move to the weekly chart. As we can see from the weekly chart, prices really have been pretty much in a stable trend since the early part of 2023. Let's take a look at this chart in detail. So here we can see the early stages of 2023 in relation to our current price analysis. It's been pretty solid, really. There are a few outlying points that may still come into play, but I don't necessarily believe they're going to have a major impact over the larger scale of where the market is currently. Now, unless we have another major event, such as the COVID pandemic, which caused this massive bearish slide, I really don't see much activity in the market that's going to really push it heavily one way or the other. I think for the most part we're going to be pretty stable within the market. So I think overall we have a large area of consolidation to work with for at least a month or so. Of course, the market can change drastically and dynamically, but I think we're pretty safe at this point in terms of any large, big pushes. But nonetheless, always evaluate your risks. Always have a worst-case scenario plan in play. Always think about the market in terms of just what can happen should it really go against you, and have your stop losses in such a way to protect your overall position. Let me know what you think. Share your thoughts. Let me know how your trading has been over the last several months. I see it has been, for me and for many others, very profitable. Both an accumulation strategy and grid trading strategies have both been remarkably resilient in this market. And I personally believe that they are going to continue as long as you have your risks properly assessed and you have a worst case scenario plan. If you like this video and you want to see more of this kind of content, please hit the like button. Thank you for watching, and until next time,